I'm going to be talking today to all of you is on the path to profitability and the challenges faced by the SMEs. So why is this topic important at this point in time? And as all of us know that there has been a slowdown in the economy and over a period of maybe the last couple of years or so. And one of the sectors which has got deeply impacted is the SME sector. And maybe even if it's not a period of economic recession, there are still challenges that the SMEs face in their quest towards achieving profitability and also the growth in the business. And therefore, this topic assumes importance in terms of what are some of the challenges that they face in the immediate term, in the short term, and the long term, and what is it that can be done to the extent possible in terms of mitigating some of these challenges. So this is what we're going to be talking about today. So in terms of the agenda, I'll basically start off by highlighting what are the typical problems which are faced by the MSMEs, and then move on to what are the immediate challenges given the way the economy has shaped up and the outlook of the economy going ahead. And then we move on to what are the short-term challenges that SMEs are faced with, and what is it that they can do to address some of those problems, and what are fundamentally some of the long-term challenges that they face. And this is something that they have been facing for quite some time, many of these challenges that I will outline. And what is it, can something be done about it? Because unless the challenges are, the fundamental problems are addressed, it would really not matter whether it is immediate or short term. So I think those are important points. And also maybe the participants can also share some of their experiences in terms of what challenges their own SMEs face on a day-to-day basis. So having said that, let us just run through the typical problems faced by the MSMEs. And if you list, I think I've put out about 10 or 12 problems, but I think all of these together, if all of these together represent, some of the key issues that they face on a day-to-day basis. So the first issue is on the finance. I'll be talking about each of those, as we move on. Then the raw material becomes another issue that they face. The sort of infrastructure that they have to conduct their day-to-day business. The technology. What sort of technology are they using? How are they going to be placed in a competitive position depending on the sort of technology that they have? Then comes the capacity utilization. Are they utilizing their plant capacities optimally to ensure that economies of scale are generated and able to achieve the efficiencies of operating at a higher capacity utilization? Power, I think all of you attending the webinar today, I'm sure will have a lot to talk about power. And then we talk about the water, the other factors of production, that is labor, which again is another important point to be dealt with. The location, where is the plant located, and how does that actually sort of affect the business of the MSMEs? Marketing. Then we talk about project planning, and while we put this point at the end, being an ancillary unit, they're typically tier 2 or tier 3 or tier 4 sort of suppliers. So what are the disadvantages of being an ancillary unit? So let's look at each of these points in a fair bit of detail. Now, if you look at the first point, which is finance, as all of us know, if you are going to be starting a business, finance is a key, or cash is a key raw material to start off a business. And whether it is acquiring the plant and machinery and the basic infrastructure and also getting people on board, finance becomes a very important aspect. While initially, you might start off, with your own money, that again may not be sufficient for you to grow and achieve the economies of scale. So one definitely has to look at borrowings. Now, if you look at borrowings, the typical source for any SME is the bank finance, and bank finance for SMEs is a little difficult to come by, and for a variety of reasons, which I will also talk about. Now, when banks are looking at SMEs, they are looking at how credit-worthy they are, and given the fact that banks are also now governed by Basel II and Basel III norms. These are basically the supervisory norms which have been set forth by the Basel Committee, for which each regulator in different parts of the world have their own guidelines for banks operating in those countries. So even the case of the Indian banks, they have a certain regulatory capital that they have to maintain, which means that if they are going to be lending to the SMEs, and obviously in a pecking order, and since they're going to be compared across the entire set of companies in the universe which is available, they typically might stack at the lower end of the credit spectrum compared to some of the larger companies. It doesn't mean that all the SMEs will get stacked at those levels, but given the fact that they are small, they have inherent disadvantages in terms of the scale of operation, the size of operations, the markets in which they operate, the profitability levels, and when they get compared with some of the other medium to large size companies, they obviously would stand apart very differently. Now, as far as the banks are concerned, while it's not that no lending is happening there, because SMEs still account for a fairly significant portion of our GDP, it will so happen that a fairly significant percentage of the SMEs may not be able to tap the bank finance, because banks themselves are governed by various regulations. So if they have to lend to a lower credit quality company, then they have to set aside higher capital as far as the bank is concerned. And raising capital in today's context is not a very easy thing. So the fundamental problem still remains that access to finance becomes a difficult task for the SMEs, and this is something that all of us have heard during our interactions also. I think if you ask what is the commonmost problem, the first answer would be in terms of there is no funding or we don't have bank finance. And anyway, we're going to be talking a little more in detail when we address some of these immediate to short-term and also the long-term challenges, where again, this particular aspect will come to the limelight again. The second important problem faced is on the raw material front, and typically here there are a number of issues that they grapple with. Firstly, they may not have the requisite or the short supply of raw materials. They're not able to get the timely supply of raw materials to have their day-to-day operations up and running. And also sometimes the quality of raw material which is supplied to them is also of a much poorer quality. And added to that is the high cost of raw materials which they source from the suppliers. And it doesn't mean that I'm painting a doomsday picture, but these are typically, maybe there are quite a few SMEs, you may not have much of the problems, but generally if you look at what is typically the set of problems that SMEs face, all of these that we're going to be talking about are things which have been highlighted by some SME or the other at various points in time. Now, as a result of the shortfall in the raw material supply, obviously the overall capacity is not being utilized, and therefore the fixed costs are also not going to be spread across a larger capacity utilization. And therefore, increasing the production cost and affecting the competitive advantage of the SMEs. The third typical problem faced is on the infrastructure side, and again here power, the availability of good water, roads, the transportation and communication can lead to underutilization of capacity. Then comes another important aspect, which is in terms of the technology that they use. Now, typically, most of these SMEs, when they start off a business, they just want to adopt and start producing and start generating revenues. I don't think much attention is really paid to the sort of technology that they would use, unless they have a fair bit of capital to be invested in that. So many of them typically use the older methods of production. And another important feature is in terms of the sort of plant and machinery and equipment which is typically used by them. Most times it might be outdated, and in many cases you will find that the plant and machinery that they have used are typically the second-hand tools and machines, which has its own disadvantages in terms of the quality and the sort of productivity that you can get out of these machines. And if you look at modernization, that is something which is always given a backseat, given the fact that there is a basic crunch of funds availability for the SME sector. And again, if you're not going to be continuously investing in modernization and capital expenditure, that is going to have a telling impact in terms of the productivity, the cost of production, as also the quality that is going to be produced. So there is a danger that you might lose a number of your customers for supplying poor quality products. Okay. Then comes the underutilization of the capacity, where again, as I mentioned, and I think a number of the points that we talked about, the underutilization can happen because you don't have the raw materials, you don't have the power, you have breakdowns in your machinery. So all of these can lead to, and I think various surveys and various studies have shown that the average capacity utilization across the gamut of SMEs is typically about 40 to 50%, because of all the sort of constraints that these units face. And this again has a big impact in terms of the sort of profitability that they're able to show. So if you operate at these capacities, you obviously might end up making losses. Again, lack of power and water supply. And I think I will show you some more statistics in terms of how India compares with some of the other countries later on. But if you look at as a problem, this is something which I think all SMEs have gone through in the last many years. I think if you look at Tamil Nadu, for instance, where the pockets were removed a couple of months back, I think while most people were relieved that things are back on track, again now the power cuts have been imposed in many of the SME clusters, where typically you'll find that there is a 10-hour power cut is typically a norm there. So how can one do business with these sort of constraints? Then comes the other factor of production, which is labor, and typically you will find that on a total basis the training facilities may not be of the order that one would like it to be. So that again gives you a set of workforce who are not trained, may not know how to operate the sort of machines that the factory has, which again can have problems when you cope up with a modern production system. And many of them may have very low level of education or unskilled typically. And the other problem that SMEs face is professionals and trained technicians also do not want to join small scale units. Now they perceive this as a separate set of companies which they think, they may not find their career prospects exciting and may not get the sort of work happiness, that they expecting. So the challenge, therefore, is in terms of how to improve the productivity, which SMEs are grappling with. Then comes the locational issues. Now, typically when any entrepreneur is going to start off a business, they typically will look at very different considerations in terms of, one, availability of cheap land. Obviously, all of these cost money, and this is something that the entrepreneurs will decide that, if there is a cheap land which is available, or if it's the if they choose a place, it typically might be a place which is a traditional workplace of theirs. Then it could also be, the family business is already there, and the familiarity with the local markets, or it could also be that there's some sentimental attachment to the sort of property that they own. So this is typically how the location is fixed and the factory is built. Now, whereas on the other hand, ideally the choice of location should depend in terms of the infrastructure facilities that are available in that area, the sort of workforce and the trained manpower that you can get, and also in terms of the cost of that particular location. Obviously, as you go closer and closer to the metros, you're going to find it that much more difficult to put together, units which can be running profitably. Then the other important consideration should definitely be raw materials and the sort of marketing that you can do, as also the closeness towards the client base. So if you are definitely operating in a cluster, then you know that the chances of you finding a good customer is going to be good, because typically if SMEs are housed closer to the ultimate customer, then there are a lot of benefits in terms of, one, being able to sell off your products to these customers, and the second also is if there are frequent design changes, or there are interactions which are required, it makes sense to be closer to the end customer. Then comes the issue of marketing, and in a sense, if you look at SMEs which are small, really small, and have just started, obviously you cannot have a marketing and a sales setup, because typically the promoters are one who's going to be doing all the running around in terms of all the activities, whether it's operations, whether it is the marketing, sales, finance, legal, and so on and so forth. So that is something that will be a characteristic of the smaller SMEs. As also, you may not expect to find transportation, storage, and the warehousing facilities, which again can prove to be a dampener for the SMEs. And given again the paucity of funds, because they don't have funds for day-to-day working capital management, advertising and branding their product becomes all the more difficult. So that again takes a backseat. But there are quite a few SMEs which have started off, and anyway, some of the big and large companies in today's context are all SMEs at some point in time. Now, for example, there are companies, for instance, EduComp is a company which typically was a small company. It's basically into the education service provider. Maybe when they started off, I don't think they would have had the luxury of hardcore marketing and publicity. But over a period of time, as they developed and they started generating cash flows, they started advertising in a fairly aggressive way. Or SUCAM is another company where they typically make the inverters. Now, I think if you ask somebody maybe 5 years ago, what does this company do, nobody may have known. But today's context, you find that there are these hoardings and advertisements at pretty regular intervals across the country, because they've been able to generate, work out a very good business plan, able to generate cash flows and able to plow it back in the business, through these means. So therefore, inherently, these units which lack, the marketing setup and the other accompaniments that go with the marketing, obviously will tend to suffer compared to some of the larger units. So that is an inherent disadvantage that they have. And also the lack of bargaining skills and staying capacity in the market is another issue that they have to contend with. And so basically it is a situation where they have weak bargaining power as far as raw material prices are concerned, as also weak bargaining power as far as the finished goods is concerned, because there are a number of SMEs who deal with the large manufacturing companies like BHEL and Larsen & Toubro and the others. So the bargaining power of these giants is so high that they're able to squeeze these SMEs out in terms of giving even the last paise reduction to the larger companies. So this is again another issue that they are faced with constantly. Then comes the issue of the project planning. Now, when an entrepreneur is going to, we can even assume that, let's say there's an existing setup, and the entrepreneur is looking at expanding. Now the entrepreneur is so busy that he's not going to be able to spend the sort of time that is required for the entire project to be implemented, and therefore the involvement in the entire exercise becomes very, very low. So there are people who are going to be helping him out. There will be these project management advisors who will help the entrepreneur in terms of getting the project up and running. And if the company is not able to manage its project well, they are going to be incurring a huge cost and time overrun. And there will also be added costs in terms of the cost of the project management consultant. Then comes the big problem which we are going to be talking about is the sort of customers that they have. Now, assuming that they're dealing with the OEMs and also with the government bodies, one of the biggest problems that SMEs face, which is also relevant as any of these challenges that they have, are the delayed payments by the OEMs or the larger companies that they deal with, and also from the government bodies. And this leads to huge working capital problems, because if they're not able to collect this money and put it back into business, then they have to start depending on external funding, which again is going to be hard to come. And also the other fact that all of us must remember is that the capital structure or the sort of borrowings that the SMEs have in relation to the net worth will traditionally be quite high. And if they're not able to make the collections effectively, then they're going to be borrowing a lot more and increasing the borrowing levels in the company, which can be quite detrimental when there is a downturn situation and when interest costs are going up. So that basically is the first reason that the liquidity becomes an issue. The second important point as far as the ancillary parent-unit relationship is concerned is the inadequacy of the technological support by the parent units. That becomes again a very pertinent point, because if they're not going to be able to get the sort of support from the parent companies, then obviously their product quality, the sort of products that they're able to manufacture will also start deteriorate. And it can also lead ultimately to quality and delivery schedules getting disrupted unduly. And again, as we mentioned earlier, when we talked about in the marketing the lack of bargaining power in terms of dictating how much they can command from the customer. They might be making excellent product. Let's say if an SME has a fairly good plant and machinery, they might be making excellent products. But given the fact that the parent companies have a wide choice to make in terms of whom to select as their tier 3 or tier 2 or tier 1, they will end up or will be forced to reduce the prices to the ultimate customer. So this is a problem, and consequently that has an impact in terms of the profitability, the sort of liquidity, etc., which can put pressure on the SMEs. So broadly, this attempt has been to list down all of these problems. Not that every SME has all of these problems. They might have some of these problems and are still doing business. And there are SMEs who are still doing pretty good. I give you some of these examples. You can, I think, Kumbhat hologram. It's not a. They basically make these, holograms, and I'm sure, given the breadth and depth of the SME sector across the country, there will be many of them, who do not have all of these problems. And they're still doing well. But what I've tried to portray here is the a generic checklist or a generic list of problems that can be faced by the SMEs. Obviously, the country needs to grow, and you cannot say that the SMEs will not be set up because there are so many problems there. So one needs to figure out how to overcome these problems and then make themselves visible in the marketplace and make themselves profitable. So having said that, if you look at, let's move on to the immediate term challenges for the SMEs. So basically, this is what we are looking at today. So one of the things that SMEs are grappling today is in terms of the liquidity issues that they have. And for instance, I think if you look at the value-added tax and the service tax, they typically have to be paid on billing and not paid on the actual collections. So this is going to impose a huge cash flow problem. And SMEs, it's not that SMEs will sell today and the money is going to come back tomorrow. So typically you'll find that the working capital cycle is pretty large and the debtor levels are also quite high. And this is going to cause a huge cash flow sort of problems. And some of the experiences of the SMEs, or even the medium and large size companies is something that needs to be emulated by some of the SMEs, provided they're able to do it. For instance, if you look at Gammon, for instance, which is a large construction company, it typically would take a fair bit of money as an upfront sort of an advance, so that they are able to meet their project expenses and other day-to-day expenses from time to time. So that is something that they do. And even if you look at some of the SMEs which are dealing with larger giants like L&T and the others, they will definitely, many of them are able to avail of the advances to start their operations and also keep their working capital limits and utilization not to the peak, but a fair bit of cushion which is there. Now, especially when you're dealing with, I think there are many examples. For instance, I don't want to name the company, but if you look at a large company which is a power company where they're in the erection phase, they've actually contracted the crane manufacturing to a number of these ancillary units. You find that the SMEs and the others who are supplying these cranes and crane components and the others to the power company have actually got stuck with no money coming in from the power company because the project has not achieved the financial closure. So there is nothing that the power company will be able to pay up the SMEs, because the SMEs already started the work. They've already started commencing and finishing of the work, but they're not able to get the payments for reasons such as the project not having closed. So that is an option that the SME can look at. But I think many of you might ask that how will they be able to get these sort of advances in large companies. There have been some instances where this is sort of happened, right? Where you do collect certain amount of advance deposits. And also the other important feature is if there is a liquidity crunch, there are other avenues that you can go to. The NBFCs to discount your bills, or there could be the specialized bill discounting firms from whom you can collect your monies which are locked up in the form of receivables. The second important challenge here for the immediate challenge for the SME is the power connections for new units is taking a long time. I think all of us are quite aware of the power problems, but for new units which are just starting up, getting the power connection is becoming a big problem. There is this company called Sargam Diecast, which is basically setting up the castings project. It supplies to a number of other the auto and other auto accessories like Bosch and many others across the country. I think their power connection got delayed by almost 9 months, and because the delay was there, the project had also become almost unviable because the interest during this period was quite high during the period that they're waiting to get the power connection, and so that sort of set back the company a bit, and the sort of profitability and other numbers that they were hoping to achieve happen at a much later point in time. The third important point is the government decision making, and that process is actually stretching, and that obvious, with all the elections and other ramifications of that is something which is bound to happen. Now, clearances of projects, I think environmental clearance these days takes much longer time than what it used to take earlier. Now, these are taking much longer time, and therefore the spin-off benefits of projects getting completed is something which is not getting available to the SME sector. And adding to that, the fact that the general sluggishness is there is also ensuring that the overall work that goes to the SMEs from the tiers above the SMEs is coming down pretty quickly. So this again is an impact. In terms of solution, there is no immediate solution for that because you have to wait for things to pass and settle a bit before things get sorted out on this front. The banks typically have placed a lot of emphasis on the past track record, and that is something which is hampering the growth of the SMEs, because one of the yardsticks that banks will look at is, what is the past track record of the business or the group. So it is, unless you have a past track record or the group is really done well, it might become a very difficult task for you to get bank funding. And if that is not going to happen, then there is no way that you are going to be able to start business. So that becomes an important bottleneck as far as the development of the SMEs is concerned. Now, the credit guarantee scheme or the CGTMSE scheme, which has been promoted by CGTMSE credit guarantee scheme, is something which has not taken off well, although it has come into existence over the last 7-8 years. But India is only about 0.2% of the GDP under credit guarantee scheme, and the other countries, which are our typical competitors, like China has 3.5%, Japan has 5%, and Korea has 7%. Now, basically, this is a scheme where you don't need to have a collateral to obtain a loan, and it's basically collateral-free, sort of loaning up to about 1 crore or something is what you would get. So the last maybe the 4-5 years is something where we've seen a lot of impetus by the government and also by the banks to push a CGTMSE scheme so that there are more avenues open to the SMEs from the banking side to start out their business or do some sort of a capex, capital expenditure for the existing operations. Talent attraction is a huge challenge for SMEs, and I think we talked about it earlier also, and attrition also. And there is this National Rural Employee Guarantee Scheme, and so that is something that people are quite happy, taking that up and working there. So it becomes very difficult to get trained and skilled manpower in the areas, especially such as finance, HR, the IT functions, and also getting labor for factory itself is becoming a big challenge, given the fact that the rural employment scheme is something which is taken on. So I'm sure that is something that all of us are also experiencing, because today's context you find it difficult to get labor even for your daily work in the house, whether it's an electrician or a plumber or somebody else. So the labor issue becomes a big issue for the SMEs, and liquidity becomes a very important aspect as far as the working of the SMEs is concerned, and that is a characteristic of a typical SME, where they're squeezed on both ends. The customers do not want to pay them immediately because of their superior bargaining power, and the suppliers want their money immediately, or they might insist on some letter of credit. So the working capital is so very tight that constantly they are in need of funds. And in times of recession, what are the things that some of the large companies do? The moment the recession sets, and this is a pattern that has been observed year after year, many of the large companies, let us look at the commercial vehicle manufacturers like Tata Motors or Ashok Leyland, the first thing that they would do is to control their working capital, because they want to minimize the interest costs and maybe carry the operations on somebody else's money. So the first thing that they would do is to basically start squeezing the SMEs and cutting down on the and basically increasing the time for them to make the repayment to the SMEs, and clean up their working capital act altogether. So that is what large companies do, and in the process the SMEs are struggling to keep their basic operations afloat. So the liquidity becomes an extremely important aspect, and that is the characteristic that we are seeing today. And if you look at, if you take a poll of 100 SMEs today in any cluster, the topmost factor, obviously they're going to be talking about power, but the other important factor would be the liquidity and the cash flows, and therefore, the limitations of them being able to access other bank finance. And there is no other finance that they can tap immediately unless they go really large and become medium-sized companies. So today, bank funding is really a major source for them, and so they have to find ways and means of doing it. There are some schemes which MSIC has, etc., in terms of giving some non-fund based limit to them, but there could also be a possibility that they can convert some of these non-fund based limits to fund based limits. But all of these are not, and that is not a big amount for them to be able to run their operations repeatedly when they are faced with a liquidity crisis. So basically, these are the immediate term challenges that SMEs are facing, and it is a challenge which is going to remain immediate in the sense that it's going to remain for some time till a lot of these are going to be taken. And to my mind, that the one thing which can change possibly out of the various challenges that I've outlined would be the decision-making process, or maybe that is something again looks that it might happen after 8-9 months, well into the next financial year. So that is something which is going to remain a problem for them. So let's look at what are the short-term challenges. So when you're talking of short-term, we're looking at the next year or so. And one, the government-related spending is going to come down, and we're going to be seeing the lower capital expenditure in roads, power, sports, and telecoms. So all this is assuming that the growth in the economy is not going to be beyond what is projected, and therefore muted growth across all of these sectors as far as capital expenditure is concerned. So SMEs who are going to be dependent on these sectors in some form or the other will have to diversify their customer base, will have to look at different geographies, will have to look at products. So basically it's a diversification of all the three critical areas as far as marketing is concerned: the customer, the geography, as well as the product. Then comes the growth challenges. Now, given the fact that there are these short-term challenges faced by the SMEs, and given that there's a liquidity problem and also a profitability angle to it, it may not be the best of time for SMEs to try and plan their growth very aggressively now. So that is something that they should not be aiming for it at this point in time. Because we are trapped in that liquidity, there is no way that you can come out, given the fact that you cannot be able to find funding sources to tide over the liquidity problem. You need to be able to have the strict control over the costs, given that profitability levels are low. You have to start looking at zero-based budgeting with respect to raw materials, the personal costs, and all the other costs. So that is something that you need to be able to do. And if you're able to control some of these, then you should be able to tone up the profitability a bit. And also use the downturn in the economy, just as some of the larger corporates would do, to consolidate the operations. See what are the problems that you're facing in your day-to-day operation. How can you better your working capital requirement? How can you control costs of raw materials through looking at alternate suppliers, and so on and so forth. So those are opportunities that you can use to consolidate. Try and introduce new products if you can, and if you've identified a market for it and a customer for it. So that is something that you should be aiming to do. And if you're a fairly reasonably sized company with funds which are available, you should try and slowly start using branding as a tool to promote your products. Now, I give you examples of UCAM, there is Pumbut, there is EduCorp, there are so many others which have been using their brands selectively to create that market presence and also create the pull from the company onto the customers, and also seek inputs from the professionals on how to market. Because one of the issues that SMEs face in terms of many of their functions is the whom to go for something. Let's say if there is a new business plan, how do we, whom do we approach and see, put together a well documented business plan? How do we plan a new product entry strategy? How do you improve the operations? All of these are things that they may not be able to do internally because they're too much caught up in their day-to-day work, and the number of people available there are not too many. So that is something that you can get inputs from any of these professionals that you will have. Then comes the profitability and liquidity. Again, looking at zero-based budgeting, see what are the costs that can be cut down, see how you can improve on the overall cost of the operations, any other methods that you want to look at from a manufacturing perspective, or do you want to do things differently? So those are things that the management should be able to do, and also see if you can wrangle some of these cash discounts when you purchase raw materials. So if you're going to be giving cash, typically many of these raw material suppliers would give you a cash discount. It can even be 5%, 7%, which at every rupee that you're going to be saving is going to be improving the way you manage your liquidity and manage your working capital operations. Power, all of us know, is going to be a problem, and it's a problem which is going to surface on and off. And so you have to try and secure that the power is available to make your operations run continuously for 24 hours. So some of the solutions could be to install your own windmills and your own solar power plants, and also have a cluster approach so that you're able to minimize costs and the power outages. By a cluster, we're talking about having maybe a number of these SMEs together in a unit or a cluster to ensure that there is power availability, and also ensure that there are operations which can be run continuously. And also there are a number of power producers who are willing to supply reliable power at an affordable cost compared to the electricity board or the grid power. So as a promoter, you should be able to look at various of these alternatives and decide on what to do. So at the end of the day, you are, as a promoter, you're expecting to make profit, and you're trying to create a value for the company. So you have to explore all sort of ventures and possibilities to cut down on costs and improve the profitability. Because on the revenue side, the leeway to increase the prices may not be much, given that if you're going to be dealing with a large company as your customer, that leeway may not be there, because large companies have the options of a number of SMEs from whom they can start a business relationship. So there is a competition there, and that is the sort of bargaining power that your customers have from time to time. If you look at the long-term challenges, I think there are a number of long-term challenges that we have, and unless many of these are addressed fundamentally, it will be a tough climb for the SMEs to show profits and report huge profitability. Now, if you look at this chart here, now it basically talks about what is the average electricity prices in US cents per kilowatt hour. Now, this maybe it's a 2-year data, but it's still valid. So there, if you look at the number there, you find that the energy costs in India are pretty competitive compared to almost every other country in the world. India is about 8 cents per unit, and maybe the others are a little higher. Maybe China is close, right? The others are like Denmark and Germany are much higher. So how do we? So what is the problem? Now, despite being having a low energy cost, this is not translating into any competitive advantage even for companies which are operating in highly power-intensive sort of sectors. Now, there are a number of reasons that can be listed out. One is the dependability of the supply. So, whether you get supply at the right time, at the right place, etc., is something which again is a question mark. The second issue would be the quality of power from the grid. The third is something that we already talked about, the ease of obtaining any new power connection for expansion and growth. The quality of the service delivery by any of the state electricity boards or SCBs is going to be definitely worse than all the peer countries that we are going to be looking at and what we've looked at in that comparison. And therefore, all companies have invested in backup power facilities, whether it's diesel generator sets, the UPSs, all the inverters, which have significantly increased the overall capital expenditure and the capital outlay of the company. So a huge amount of money gets locked up in all of these. And the cost of backup power is in any way higher than that of the power that we source from the grid. And this itself ends up making the whole business a very unviable proposition. So typically, if you look at those which are highly power intensive, power is a significant portion, let's say 40–50% of their operating costs, there is no way that these companies can make profit. And the accompanying reason also is that the constant disruptions in supply and poor quality, and constant switching off, switching on, and all that is going to be leading to disruptions in the overall productivity of the company. So unless the first reason here is sorted out in terms of dependability, the quality, and the ability to sanction a new power connection immediately or within a reasonable time frame, the profitability is going to be a big issue for SMEs. Then comes the interest costs. Now, if you look at the prime lending rates across various countries, you find that the countries such as even maybe China is relatively lower than India, but all the other countries have very low prime lending rate. So basically the lending rates by the banks to companies or corporates. Now typically if you look at SME, they may add another 3–4% to the prime lending rate. This typically represents what they might be giving to a top-notch corporate. So as you come down on the credit quality, the overall rate of interest will also keep going up. Now, if you're going to be having such high interest rates, coupled with, I've already talked about power, and when we talk of all the other factors there, it again is going to be a big challenge in terms of making the SMEs competitive and making the Indian manufacturing sector itself competitive. And if there is going to be an SME which is dealing in a product where there is an import threat with such high cost of borrowings, SMEs in India will remain uncompetitive and will have to get slowly taken over by the imports which are going to flood the Indian market. And I think that's something which we have seen over the last many years. When you see a number of commodities, whether it's steel or whether it is any of the petroleum sector products like PVC or aluminium or any other metals, you find that there could be large-scale imports into the country. Given the fact that India is a global economy, etc., you cannot avoid imports because the domestic price is much higher than the landed price of imports. So unless the fundamental structure of the interest rate, the power structure, etc., has changed, that is not going to alter the low profitability of the SME sector. So there have to be fundamental changes to bring about an increase in the profitability of the business. Again, access to credit to the private sector is also very thin. It should be substantially improved from 50% of the country's GDP to about 200% of the GDP. So these are some of the numbers that I just pulled out from a World Bank study, which basically shows the private sector credit to the GDP percentage for a few countries. And there, if you look at it, well, India has gone up from 22% to 51% over the last 30 years or so. Now, India at 51% is still at a level what many countries were some 30 years back. So that poses a big problem, because that flow of credit has to improve substantially, so that there are more companies which are set up, there are more SMEs which are set up, there are more opportunities for people to run their businesses, and coupled with a lower cost of interest, they should be able to generate greater profits for themselves and also make India a much stronger manufacturing sort of a base. Infrastructure bottlenecks is something that I'm sure all of you are familiar with. For instance, we look at turnaround time in ports, and the distance traveled by finished goods in 24 hours. They're all very weak compared to the rest of the world. So, in a highly competitive marketplace, such bottlenecks can prove to be a big dampener for companies in terms of their ability to compete with some of the other, developing nations, some of the other competitors. And unless these are changed, well, every year we are talking about, improving the infrastructure by leaps and bounds. The progress has been pretty tardy because of a variety of reasons. Then comes the issue of labor productivity in India. Again, very poor level of budget for this in India compared to that in China. India has only about 5% of its investments in skill development compared to that of what they provide for in China. So unless, well, there have been various attempts by the National Skill Development Council and the others, at an aggregate level, unless the productivity is improved, you're not going to be a competitive player in the marketplace. So there has to be a lot of skill development done, there has to be a lot of training done, and there has to be much more investment in education and target the sort of investments there in a more effective manner. Then comes the issue of raw material. As I mentioned earlier, as a generic sort of a problem, the availability of raw material, the timeliness on which the raw material is received at the factory place, quality of the raw material, who's supplying the raw material, these are all big challenges for them. What price are you going to get that raw material at? All of these are challenges that will continue to remain. And the SMEs, I think it is basically the cycle has to be broken somewhere, whether it is finance or whether it is liquidity. I'll talk something more on liquidity also when we come to that. The cycle has to be broken somewhere to ensure that some of the basic things that we take for granted in other countries is not something which seems to be a luxury in India as far as the SMEs are concerned. So raw material along with power will continue to remain big challenges there. Then comes the issue of succession planning. Now, on a long-term basis, succession planning is going to be a big issue. Because typically when a business is started off, there is going to be only the promoter who is going to be carrying out all of his company's operations all by himself, whether it is marketing or finance or legal or the operations by itself. And as they grow, as the company grows bigger, and the company is getting into newer levels of revenue streams, there will be a need at some point to slowly formalize the structure within the company and slowly decide, if somebody from the family is going to take over the role of the promoter or any of the other senior roles that will open up in the company. Now, many times, if you look at the SMEs particularly, there is no succession plan in terms of who will take over and what will happen if something happens to the promoter. So those issues again are not very clearly articulated. And that is something that SMEs will have to do. And in many cases, you will find that there are companies which have grown, the real hard way, and suddenly found that there is no one to take over the company at a particular juncture. So succession planning is an area where promoters will have to concentrate and provide some sort of focus to that. Then comes the issue of liquidity. Now, this is something which is a typical characteristic of Indian promoters, that their importance to liquidity management is something which leaves a lot to be desired, because they don't believe in planning for liquidity and setting aside certain assets to maintain liquidity. The typical psyche of Indian promoter is to look at draining out all the resources in good times. For instance, the company is doing well and the economy is doing well, the company is generating a lot of profits. The typical attitude would be to drain out the resources and invest it in some illiquid assets. It could be something like a land or a building or somewhere which might be a good asset, but it's not a liquid asset because you can't sell them when you want to. And therefore, there is a crying need for the promoters to firstly understand what is happening on the financial side of the company, to understand what is profitability, what are the cash flows which are being generated, what is the sort of liquidity that is required to keep the company afloat and make sure that the company is able to make up the payments from time to time as they are due. You can have a 1-year sort of a plan and then decide their strategies accordingly. So maybe the promoters are not aware that these are important, but definitely it is something that they would need to focus on very critically. Now, many times they will find that they may not want to spend that extra money with the bank in terms of maintaining a giving some sort of a margin to the banks to maintain a relationship and get funding. Now, typically what happens is banks typically go by the credit profile of an SME. So typically they look at a credit rating scale starting from AAA downwards to D. And AAA is the highest rating, and then followed by AA, A, and BBB. So unless your rating is BBB or BBB plus or even BBB minus, it is very difficult for them to get bank funding. So earlier on, banks used to lend money to SMEs, based on relationship with the promoters, the knowledge of the promoters, and so on. And those days are changing and will change with all these Basel II and Basel III norms. The banks are supposed to look at the credit profile or the credit rating of the SME or the company before they lend. So if banks decide that they don't want to give funding to the SME which is rated BB or BB plus, there is no other option for you available, because you cannot go to some other bank and try and get money. All banks will operate on very similar principles. So that you need to have a very healthy relationship with banks. For instance, let's say that you have a BBB minus rating or a BBB rating. The bank's condition is that if you're able to maintain some sort of a margin money, then you might be able to get some sort of a loan from the banking system. Maybe they will look at your rating as maybe you don't call it margin money. Maybe you can pay a fee there to ensure that you maintain a banking relationship and are able to get some sort of a funding there. So that becomes important from a liquidity point of view. The other important aspect again is unwillingness to spend on professional consulting, especially for SMEs which do not have a very structured sort of an organization of various people there, whether it's finance, technology, or marketing. For instance, if you look at marketing, they might have plans of diversifying into some other product line or some other geography, or with a totally different customer. So how do they chalk out the strategies? Something that the promoters may not be aware of. What do they need to do? So it might seem like a penny wise, pound foolish sort of a situation where they are unwilling to pay that money because they think the consulting will cost money. But had they paid that money and got the right sort of advice, they perhaps might have earned revenue which might be 10 times the fees that they have paid. So that is on the marketing side. Again, on the technology side, what sort of technology should I adopt? Where can I source a technology? How will I implement the technology in my existing setup? So those are all things which consultants can provide. There are enough and more consultants who are available across the country who can provide this sort of a service. Then when you come to finance, again, how do I structure my balance sheet to ensure that I'm not highly borrowed and highly geared? How do I do that? Secondly is working capital management is a big issue for SMEs, as we have been talking about it now for some time. How do I manage my working capital? How do I improve my collections? How do I, try and stretch my creditors? That is another aspect you can do. The third is in terms of the cost control. How do I control the costs on an overall basis? What are the critical costs that I need to do? So unless someone sits and does this exercise, the promoters or his team may not have the time to spend and understand and analyze each of these issues. See, ultimately the options available to the SMEs to improve profitability are not too many, given the way the business is structured and the other constraints that we talked about. See, they can increase the selling price only to a very limited extent. So that is something which is a given. One of the things that they can do is improvise on technology, improvise on marketing, and improvise on the overall cost efficiency. So how cost efficient you can be is something which is well within your control. You can choose different raw material suppliers. You can streamline your production activities. You can cut down on your labor force. Maybe you don't need 25 strong workforce. You might need only about 17 to 18. So all of those things are well within your control. So it may make sense to spend a little more on professional consulting rather than always thinking it's a very expensive proposition. And last but not the least is the outdated technology. So many cases you find that the sort of technology that they have is something which may not be able to churn out the products which the end customers would want to have. So if you are able to change that, then you might be able to make a greater impact on the customers and also make a greater impact as far as the profitability is concerned. So that is one part of it. The other part of it is also in terms of the funding part of it. How do I make the bank aware that I'm a company which will do well and which has a potential to do well? How do I convince the bank and obtain bank finance? There are a few ways to do that. See, firstly, when the bank is looking at a company, let's assume that the company is a new company which has been set up. Obviously, the bank is looking for a proper business plan in terms of what is the business all about and what sort of potential is there for the company and what sort of margins the company is going to be able to obtain over a period of time. So the starting point there again is to set out a correct business plan in terms of what the company is all about. And that is where a lot of promoters make mistakes in terms of not being able to articulate their thoughts into a well-documented business plan. And obviously the bank has a number of SMEs, a number of companies to choose from. So your business plan is something which has not been well articulated. Although you might be an excellent entrepreneur as far as the technical knowledge is concerned and the sort of product is concerned, you may just lose about in terms of getting the bank funding. So that is something that you need to look at very closely, and that's something that we're going to be talking about in the webinar, which is another webinar which is scheduled on business, how to make a good business plan later this week. The second important aspect on the funding side is, I'm spending a little time on funding because that is a key to this whole this thing. So if you have good funding at affordable cost, that is going to sort out half your problems. So the other important aspect is, how do I improve my credit standing in the eyes of the banks with whatever constraint that I am faced with? So that is another exercise which needs to be done by all the SME entrepreneurs, and that is through a credit, rating sort of exercise. Because today's context, the banks are asking for credit rating of SMEs wherever they have lent or planning to lend 5 crores and above. So if you have a good credit standing, you will get, bank funding, and if you improve upon it, your interest rates also will come down over a period of time. There are a number of examples. I think the Indian number of SMEs who have got themselves rated almost is, over 75,000 or 80,000 now. There is still a huge mass of them who need to get themselves evaluated by the rating agencies. So that is an area where every 0.5% or 1% saving interest rate can go straight to the bottom line of the SME and add profitability. So if you go through an exercise of that nature, then you'll be able to address all the deficiencies there and take corrective actions. Now, how you want to do that whole exercise will depend on what you think is priority. Now, if you think that you do not want to spend money on a rating exercise or on a consultant who will help you guide through it, maybe that's a price that you will pay for, not paying a small money. I think many times what happens is promoters think that all of these cost a lot of money, why should we pay it? But unfortunately, they do not look at the sort of savings that you will get if you manage to get a good rating or at a fairly, let's say maybe in a couple of years' time, if you get a favorable rating, you're able to save about a percentage. That's a huge saving on your interest costs. So likewise, while we have listed out challenges and across various time frames, there are ways and means of overcoming some of these challenges, either through funding, either through hiring certain consultants to tackle some of the basic problems in your business, maybe looking at different raw material suppliers, trying to obtain power security. So you have to identify which is the area that is going to cause you the most damage and tackle that first. Maybe customers is something that you might want to look at. Diversify your customers. Maybe go, instead of going to the top-notch customer where you have no bargaining power whatsoever, maybe look at one level lower. That might be another option that you want to look at. Or maybe diversify across a number of areas or geographies where you can spread your risk a little more. So those are other avenues that you can do. So obviously the road is pretty tough in terms of the profitability, but it doesn't mean the companies are not generating profit, because all of us know that many of the large and medium-sized companies are all SMEs at some point in time. So I think everyone has gone through the these ups and downs in their business. And at the same time, the government, for instance, the CGTMSE scheme is something which the government has been publicizing so widely over the last many years. But if you take a look at, maybe a sample of SMEs and ask them, how many of you are aware of it, you'll be surprised to know that not many of them are aware of it. So the government is making all-out efforts. The bank is also, targeting it on a war footing. And I think we should remember that SMEs, constitute for a fairly large chunk, almost about 30–40% of our GDP. And that is a sector which is being looked at by everybody, including the banks. So the banks are also keen to lend to them, but they have to operate within a certain boundary in terms of how much they can lend, whom they can lend, how should they lend, and so on and so forth. So that is the sort of challenge that even the banks have, because they are also governed by these other prudential norms. So to sum it up, I think the issue would be in terms of addressing these various challenges in the best possible way. Obviously, there are a number of challenges. It doesn't mean that every, as I mentioned earlier, that it is a doomsday or a gloomy picture. Different companies will experience some or all or none of these issues. So it is for you to, it's for the company rather to decide on, how to overcome any of these problems that they are faced with from time to time and move ahead, and also learn from some of the other SMEs which have emerged out of these difficulties in their early avatars of business. So I think with that, I think we can open up the floor for any questions that you might have. Okay. Okay, I think for the first question is from Mr. Senthil. What is Basel II and Basel III? Basically, Basel II and Basel III are regulations as far as the banking sector is concerned. Now, these are regulations which have been set by all the regulators, across the globe. Basically, Basel II and Basel III are something which has been promulgated by the Basel Committee on banking supervision. Now, the basic idea is to set certain norms as far as the capital requirement that banks have to make. Not only the foreign bank, but also banks across the globe. So that is what they will have to do. So according to this, the sort of capital that they will set for any lending that they do will depend on the underlying credit quality or credit profile of the SME or any other company. So what will happen is, the lower the credit profile, the higher is the capital that they have to do and higher is the interest rate. So let's say your company was, they typically have a 1 to 8 point scale. So if you're rated 1, it means that you're the best amongst all the others there. So you will have the benefit of getting a lower interest rate. Let's say the interest rate was 12%, you might end up getting 12%. Whereas someone who was rated 8 will end up paying 15 or 16%. So that is what this whole Basel II and Basel III is all about. Now, how is it important for SMEs? For SMEs, it is very important because when they are going to be evaluated, they are going to be compared across all the other companies in the country, for instance. So you will be pitching yourself versus somebody else and then fighting for bank finance. So when you start off, obviously there are certain disadvantages that you come up with in terms of smaller size and lower profitability and so on. So as you compare yourself with the others, your credit quality may not be all that high compared to some of the bigger corporates, but still it is important for you to ensure that you get a very acceptable sort of rating for you to get bank finance and also the interest rate which you can afford to pay. And therefore, this whole Basel II, Basel III becomes very important. And therefore, the bottom line is that credit rating of SMEs become a very important aspect from a funding perspective. So if you don't get a credit rating maybe a year or two from now, you may not get bank funding at all. And therefore, you may not be able to do any business. So that is what this whole Basel II and Basel III. Basically, I think Naveen has asked a question in terms of the investment, the limit. There is a 5 to based on the plant and machinery investment. There is 5 to 10 and 10 to 25 and greater than 25. I don't remember the exact numbers at this point, but broadly it is calculated based on the overall asset investment in plant and machinery for the company as a whole. So that is how it is calculated. The other question is from Mr. Senthil in terms of what is zero-based budgeting. Basically, what do you mean by zero-based budgeting? So you start once you start assuming that you're looking at everything afresh and deciding on what is required and what is not required. Let's start with excuse me. Let's start with the workforce or the employee base. So there you will take a stock of how many people do I need in my shop floor to do the work. What is the sort of productivity they have? Let's assume that you have 25 people now. So there you want to take stock of how many people do I actually need now to do the work given a certain level of productivity. Let's say 25 people costed you, let's hypothetically 25 lakhs. And if I can do that, all that with 15 people and costing me 15 lakhs, then I'll have to start looking at these 15 people rather than looking at 25 people. Therefore, I will start looking at each of these costs afresh in terms of achieving my desired level of output or desired level of revenues. And the reason for doing that is to see what is my actual cost that I should be incurring and what is the cost that I have incurred now. That is what this whole zero base. So you start afresh and relook at all the costs and put a number to it. Now this is what you will do when you want to do this. You will start doing that when you find that you're cornered on the revenue side, you're cornered on the cost side. But cost, you can take a look at it and control on the cost or cut down on the cost from time to time. So that is what this whole zero-based budgeting exercise. Okay, I think Mr. Khan has asked a question. How do we classify the companies, organizations, or government bodies who practice better payment terms? Okay. I don't know what name you want to give them, but maybe the reason why they are able to make the payments, in a much lesser stringent manner than some of the others would be that maybe the cash flows and the working capital cycles are pretty good out there. That they are able to, they do not depend, money on the, they do not use the credit which is given by their, suppliers to manage the working capital requirement. So maybe the working capital requirement is pretty comfortable and they're able to manage it effectively, that the payment terms. Normally, let's say the auto manufacturers, for instance, let's say Maruti or somebody else. Now when there is a recession, the first thing that they will do is, anyway, let's say the credit period that they were giving us 60 days. What they will do is increase it to 90 days. Now why will they do that? They will do that because their bargaining power is so very high that the SMEs will have no other option but to agree to that, because if they say that, we are not agreeable to this, Maruti might now pay him once at the end of 60th day, but then there are so many other SMEs waiting for that slice of Maruti's business. So it is easy for Maruti to get somebody else, or somebody like BHEL to get, many of the other SMEs or L&T or any of the larger companies to get the SMEs to supply to them. So that is why, that is one of the reasons. So whereas some of these other companies where you say that they are able to give better terms, maybe the sort of working capital that they are able to have is quite comfortable, and therefore they are able to pay off the suppliers in a pretty reasonable time frame. Okay, any other questions? Okay, I don't see any other question on the question box. So I think somebody had asked a question earlier on in terms of you're not able to view the previous class presentations on CII web. I think we have the My CII person out here. You want to take that question? That the earlier webinars are not able to view some of the presentations.
Mr. Vasantraj, let me look into that, and let me also have a word with Mr. Rao. I will look into it and I will just come back to you by today end of the day.
I hope that sorts your problem, Mr. Vasantraj. Okay. I think, Mr. Khan, the same answer will apply to you also. I think all of these presentations are being uploaded or in the process of being uploaded on the myci.in, and I think you should be able to see it. In case you're not able to view it, the recording and the question answers and the presentation in totality, I think please check with CA. I think they should be able to sort it out for you right away. Okay, I think there's another question. How to maintain cash flow, Mr. Ashutosh? Okay. Now, how do you maintain cash flows in a company or in an SME? Obviously, there are various strategies that you can adopt. Now, one of the strategies that you will do to maintain cash flow is to collect your receivables or debtors as quickly as possible, which means that you should be able to have those sort of clientele with you who will be able to maybe pay you on time, not delay the receivables. Now, it's a very complex sort of situation as far as, let's say an SME or, some of the companies which have these characteristics. Now, all of you are familiar with the whole, working capital cycle. Now, the typical working capital cycle will be that you put in your, money, you buy in buy the raw materials. Let's say when you start off the business, or let's say even if you have bank funding, you get the raw materials, convert to finished goods, sell it, and then use that cash to buy again your raw materials and start the cycle all over again. At that point in time, part of the money that you're supposed to get is locked up in the form of debtors. So one of the strategies will be to get the money from your customers as quickly as you can, and also maybe have some more favorable terms with your underlying creditors or suppliers of raw material, so that there is some sort of flow of money into the business. That is basically to manage your working capital. Now, if you look at that, is again to ensure that you do not borrow more and more from the banking system to run your day-to-day operations. So that is one effective way of cutting down on your interest costs. If you cut down on your interest costs, the overall profitability and the overall cash generation will also improve a bit. The other obviously is try and see if you are able to increase your revenue streams. It can either be through any of these strategies that I already mentioned. Try and introduce newer products. Try and have different geographies where you will operate. Basically, diversify your geographical sort of presence, and also diversify your customers. It's possible that not all your customers will delay your payments or stretch you beyond a point. So that is another way to do it, because in an SME sort of situation, the sort of profit band that you will have is not going to be very large. It will not be like a typical large company that you will have a big EBITDA margin, because you're operating in an environment where your customers are, let's assume for a moment the customers are these large companies that you're dealing with. So there the profitability band that you can operate with is going to be a little thin, and therefore the strategies that are available to you are also quite limited. One, control on costs. The other, collect your receivables early. Third, try and stretch your suppliers a little bit. So once you're able to do all of it, and then follow some of these other marketing strategies wherein you'll have various diversities in your business activity. So all of that will be able to help you have a better cash flow than if you were operating only in one market, operating only with one or two customers. But those are all dangerous situations. If one customer does not pay you, then you are going to end up in a situation where you're going to be struggling for cash and having to go to the banking system again and again. And that's something which luxury you may not have from time to time. Fine then. So thanks everyone for your presence and participation. And with that, I think we can close today's webinar. Is there something I need